Good afternoon, everyone, and welcome to the Green Room. I'm going to be joined by Jillian Broadbent and Greg Combet. I'll do introductions in a minute, but very excited to have the opportunity to talk about the CEFC as it has now reached its 10th birthday, so a decade in. My name's Ian Learmonth. I'm the CEO of the Clean Energy Finance Corporation, and I have been for 5 years. I'd like to acknowledge the traditional owners of the land upon which this conversation is taking place here in Sydney, the Gadigal people of the Eora Nation, and I pay my respects to their elders past, present and emerging. Some quick housekeeping points. The formal session or the conversation here will run for 30 minutes or so, and then we're going to have some Q&A, and we'll probably keep it a little bit loose, but as we'll certainly give plenty of time for the audience out there to send in questions. Now the questions are available in the Q&A box, which I hope you can see on your screen. We'll try and get to as many of those as we can. So let's get started. It is a very exciting Green Room today. I mean, I'm sure many of you have joined many of some of our previous webinars, but as I say, because it does mark our 10-year birthday, and it gives us a chance really to reflect on those years, how we came about, how we came into being, which was kind of interesting, and the thinking behind that, some of the challenges along the way, some of the achievements, of course, as we reach, as we kind of got to today, and where we head to both as the CEFC and Australia, of course, with significantly greater ambition and commitments around climate change, and the CEFC very much in the sights to help deliver on getting to net zero by 2050, and of course there's the legislation that's being passed as we speak to seek reductions of 43% of emissions by 2030. In the last 10 years at the CEFC, we have actually accumulated commitments, investment commitments, in the order of about $10.7 billion. And given how we always try and seek to crowd in private sector capital alongside us, that has translated to projects in the order of about $37.15 billion. So for every dollar we put out the door, there's been something like $2.50 of private sector funds alongside us. So we're very proud of that. And the transactions and projects that we've invested in over their life will abate something like 200 million tonnes of carbon. On average, over the last 10 years, we've been investing about $1 billion a year. I mean, some years we were investing, particularly in 2017-18 or so, commitments in excess of $2 billion a year. Earlier days, we were sort of still, building our capabilities. We're now getting money back. There are, of course, repayments to the tune of about $800 or $900 million per annum, certainly in the last few years. And that has accumulated into something like $3.3 billion funds repaid. We have access to more capital. We're $10 billion, and today we've got about $6 billion out the door. So we have access to something in excess of $4 billion still back there in Canberra in Treasury. We've committed to nearly $6 billion of renewable energy projects, and that translates to something like 3.6 gigawatts of renewable energy capacity. So really a very substantial contribution to the growth of renewable energy here in Australia. So to my very special guests, who both, of course, have been instrumental in the establishment of the CEFC, and have also made very significant contributions more broadly to public life. On my right-hand side, I have Jillian Broadbent. Welcome, Jillian. Now, Jillian, I'm sure many of you know, has had a very distinguished career across Australian business, the public sector, governance and the arts sector, having been on the board of the Reserve Bank for 15 years or so. Jillian was, of course, the inaugural board chair of the CEFC and is currently a director of Macquarie Group, has been on many corporate boards, Qantas, Westfield, Woodside and others, so terrific corporate experience. 2019 was made a companion of the Order of Australia for her contribution to corporate, financial, clean energy and cultural organisations and to higher education and women in business. So very excited to have Jillian here. Also on screen we have Greg Combet. Now Greg, the Honourable Greg Combet AM, is well known also for his public roles. I guess first rose to prominence as leader of the ACTU and as a Labor government minister, including Minister for Industry and Innovation. As Minister for Climate Change and Energy Efficiency under the Gillard government, Greg was instrumental in the establishment of the CEFC. We're going to hear a bit about that. Today he's chair of IFM Investors, which of course is that very, very large infrastructure fund supported by industry super funds, chair of Industry Super Australia, chair of Industry Super Holdings, and also chairs the advisory board of Invest Victoria and continues to consult governments, unions and corporations. So also very pleased to have Greg here in on the conversation. Where we might start, we might go back to the very beginning, if that's all right. And I'm going to start with posing a question to Greg. Tell us about the very earliest kind of thinking around the establishment of a green bank like the CEFC. How did that kind of come together? What was the thinking around establishing the corporation?
Oh, well, thanks for the question, Ian, and thank you for having me today. It's a real pleasure, and to be here with Jillian as well. And hello to everyone who's watching. The origins of the CEFC are really in the 2010 election, oddly enough, and Labor formed minority government, and I had been, prior to that election, Penny Wong's assistant in the climate portfolio. And then after the 2010 election, Julia Gillard asked me to be the minister. But we're in quite a different environment, and I had to negotiate a climate package with the Independents and the Greens in both the House of Reps and the Senate. And that started a pretty intense set of negotiations. And the Clean Energy Finance Corporation was one of the products of those negotiations, and people might recall that at the heart of the Clean Energy Act, that we called it, was a carbon pricing mechanism, the regulatory arrangements, the Clean Energy Regulator and a host of other measures. We also put in place a very big grants program called the Clean Technology Investment Program. But what we thought was missing from the piece was a financial institution that could offer loans and make equity investments in circumstances where we thought there were market failures. And what I mean by that is that in those 12 years ago, banks and other financial services institutions weren't investing so much in renewable energy, in clean technologies, in innovation in clean technologies. It was a pretty bare field, in fact, from when you're sitting there looking as a minister. And we recognised, of course, that private sector investment needed to be mobilised, and that could perhaps be catalysed by setting up an organisation like the CEFC to accept a lower return in some circumstances and to take on some additional risk in debt and equity investments, but that it must be independent of government, have an independent board and operate with investment disciplines to be successful. And that was the thinking behind it at the time, and it was part of the package of measures that was then agreed across the Parliament that enabled the passage of a pretty comprehensive set of legislation, some of which unfortunately was later repealed by the Abbott government. But I'm really proud of the fact that the CEFC emerged through that process and that it's been very successful. And it was a real pleasure just to listen to your introductory remarks. It many of the things that the CEFC has done. We approached Jillian, that is Treasurer Wayne Swan, and I to investigate the establishment of the CEFC. She'll no doubt tell you a little bit about that in a moment, but we were really pleased when she accepted the responsibility to be the inaugural chair of the body, because we had a great degree of confidence in her capacity to take on a pretty big challenge, in fact, and that's to set this up from scratch and to start to take the plunge to try to catalyse a lot of investment that needed to be made in renewables and clean technologies. We had also legislated a renewable energy target, of course, and we felt that that would provide a strong institutional legal environment, if you like, for renewable energy investment to take place. But nonetheless, quite a few players in the economy were not necessarily all that keen on jumping in at that time. Fast forward 12 years, and I think it's proven to be a really successful initiative.
Yeah, no, certainly has. And thank you for that. And so the ball was, was rolling. And Jillian, you were then put together a committee of experts and had a look at how this might be implemented.
Yes, I thank you, Greg, for saying you selected me. I don't think there were many people who wanted this job. At the same time, when I was asked to undertake a review about how really to identify these market failures or to contemplate the form that the CEFC would take, I asked Ian Moore, who worked at Bankers Trust with me, and David Paradise, who started a small cap fund, to join me on this committee so we could tease out the form that it might take, because, as Greg said, the idea was you'd be able to go into debt and equity, and you were going to have these three streams of renewable energy, energy efficiency and low emission technology. But if you're building a portfolio from scratch and you're working out how you deal with the diversity and risk and the balance of the public purpose and yet the financial disciplines of making sure you don't lose any money. All of that required quite a bit of thinking about how it works. And as Greg said, it was important, and there was government support for the fact that the board is independent, because there were a lot of entities set up by governments that either lost their way or lost their money, and we wanted to have protections against that happening. So we had about 5 months or 4 months over, I think it was something like November through to February, to over the Christmas New Year period, to try and put forward the recommendations for the form of the legislation and how it might practically work, and how the structure would be independent and would have mechanisms for the government to review and audit and direct it, the ministers direct the areas of focus of the investments, but still having a very defined purpose and discipline embedded in the legislation.
And some of those key features have obviously served the CEFC incredibly well. I mean, I think the independence of investment decision making was very important, and you probably felt that even from the start.
I think that's right. And one thing Wayne Swan was very supportive of when I was going through with him the board, it was very important to me, if I were to chair this thing, to make sure I had the skills on the board that were necessary, not a whole lot of people who you thought, oh, they'll do, or one of those and one of these. So we had we had to have people who knew the energy market, who knew the finance market, knew about making tough decisions of when to say yes and no, and also had a sense of public purpose of, if you are going to give a slight concession on the interest rate of the transaction, you had to quantify exactly what the public benefit of that was, and put in place disciplines to say, oh, that'll do, this will do. So we were very firm on the way we'd make decisions, and when we were making decisions that did require what we thought was a subsidy, whether the subsidy was warranted and what was the benefit of that subsidy, documenting it and documenting what we thought would be benefits. And all of that discipline, I think, served us well, because when there was a change of government only a year after we'd come into existence, and Tony Abbott was reviewing the renewable energy target with the idea of abolishing it. I think most people thought it was going to be abolished. The banks, the major trading banks, who'd been quite active in renewable energy projects, said, "Oh, I think I'll just step aside from this. This doesn't sound like a very safe area to be, or even an area that you'll win any friends politically," so that they just left the sector. And in that sense, that left a role for the CEFC to be able to undertake lending into an area which was pretty low risk, but there was a need to fill that gap without having to try and build a portfolio that might have been more risky. And I think that served us very well, because the government of the day then was certainly hovering around waiting for us to trip up, and was working on trying to abolish the establishment of the organisation, and trying to keep the organisation going in that environment did mean that we were more conservative than we might have been. And it's not a bad thing to have somebody breathing down the back of your neck waiting for you to trip up. It just makes you very diligent about the structures and scaffolding you put around the organisation, and I think that really served it well in the long term.
Yes, look, it certainly, and because the Act was passed, I think July, 2012, which meant that it was only really within about, as you say, 12 months before the government changed, and there was a very, very different and somewhat hostile view of the Abbott government around the CEFC. I mean, you'd obviously, the board was in place. You'd hired Oliver Yates, the inaugural CEO, who I think was certainly the right man for the times. They were difficult times. And how was it? I think the organisation itself probably. It must have been difficult in some cases, because I hear stories, as the more recent CEO, about those days where counterparties were nervous to deal with you. They said, "Oh, will you be around next week? Will you be good for the money?"
Well,
those sorts of challenges.
I think that's right, and we had to run very hard to what I thought was demonstrate the merit of a structure like this. I didn't realise that the incoming government didn't care less about merit. They just wanted to abolish it. As they said to me, it's not our policy to have you. And I was thinking, oh, well, they'll look at our homework and see we've done a good job, but they didn't have any appetite for seeing that at all. No. So they just said, look, it's our policy to abolish you. And so we just had to keep our heads down and try and build something that we thought we could defend. And then I realised, oh, they were never going to be looking at our homework, whereas interestingly, thinking somebody's looking at your homework is a good thing. It's a good discipline, and it's a good foundation for building something that endures. And Ian was saying to me, what are the highlights? And I can remember when Josh Frydenberg invited us down, because our 5-year term was finishing, and to say thank you. And that was a courtesy that we thought we should accept. In Parliament House at the time, there was a renewable energy conference, and about 3 people came up and said, "Oh, thank you," and I felt like quite a celebrity, and one of them said, "Thank you for holding our hand in the darkest hours." And I thought, that's what we did. We held their hand in the darkest hours when everyone was running away from them. So I think we did manage to build up not only a respect and regard in the finance sector and in the environment space, but also a real appreciation of what we were doing when no one else wanted to come near them.
No, I'm sure. And Greg, were you? I guess you may not have been surprised by the approach of the incoming Abbott government. Did you think the CEFC was doomed? Did you?
No, I didn't. Jillian's painted a case why not, and it was certainly in my mind as the minister when we were legislating all of this that it was climate politics was just fierce at that time. It's still tough now, but at that time it was a blood sport, and Tony Abbott was very clear that he wanted to abolish everything. He was a skeptic about the science, and we had those terrible rallies outside Parliament House and effigies of Julia Gillard and all the rest of it. It was a pretty horrible period in politics. So I was not naive about the fact that we were likely to lose the next election in 2013 and that there'd be a pretty fierce attack on the legislation that we had got through the Parliament. But in designing everything, I tried to make everything as weatherproof as possible, if you like, as Abbott-proof. I had real hope that the CEFC would be in very sound hands with Jillian and the board and operate. It was very important to us that it operate independent of government, be disciplined in its investment focus, do exactly what Jillian was describing about thinking about why you might accept a lower rate of return on a particular investment in order to achieve a policy outcome that catalysed private sector investment in renewables or clean technologies. All of the hopes that we had for how it would function were delivered, and that's what did make it Abbott-proof, essentially, as well as the makeup of the Parliament. Tony Abbott didn't have the majority in the Senate, so he couldn't have his way entirely, but it was a very concerted assault. And of course, as part of that, the carbon pricing mechanism was repealed. But a lot of the other elements, the regulatory environment, the clean energy regulator, the renewable energy target, a whole host of the other reforms that we put in place to try to bring down emissions in a rational way and to stimulate investment, they've survived and I think operated really well, as evidenced by 10 years of success of the CEFC.
Yeah, no, that's very true. And I guess with those abolition bills, they had to get through a Senate. And in those days, of course, the Senate was controlled by the, Clive Palmer and the United Party, or the Palmer United Party. Palmer United Party, extraordinarily. So that, the story goes that, he was maybe, sitting on the fence a bit unsure, and then Al Gore, of course, happened to be in town, and they did a joint press conference together, and he announced that he was going to, he'd vote against the abolition bills, and who would have thought Clive Palmer would have been instrumental?
That was probably the last best thing.
Just to be clear, however, he had the most profound conflict of interest that led him to vote to abolish carbon pricing. That is, he owned the Queensland nickel refinery in Townsville, which is one of the largest emitters in the country at the time, and by voting down carbon pricing saved hundreds of millions of dollars for that particular facility.
Yes, yeah, well,
it wasn't. He was not self-interest. You need to back it.
Yeah. But anyway, so that was the end of the abolition bills, and Malcolm Turnbull came in, and the rest is kind of history in terms of the CEFC. And Josh Frydenberg, of course, was my first minister, was very incredibly supportive, embraced the CEFC, and increasingly, over the balance of years of the coalition government, they really saw the CEFC as a critical kind of agency in delivering climate policy. So things change.
Yeah, and I think they recognised that the CEFC was here to stay and it was doing a good job. You might as well own it. There was a bit of that going on. But I think also they found that the model was quite useful because it had demonstrated that if it's independent and it has disciplines, then you can meet market failures selectively when you want to progress a policy and an ambition that suits. And we spent quite a lot of time initially talking about our purpose, and we had this thing of accelerate Australia's transformation towards a more competitive economy in a carbon-constrained world by acting as a catalyst to increase investment into emissions reduction. And it was very much positioning Australia to be competitive in a carbon-constrained world because that was what was happening in the world, not in Australia, because the government of the day said, no, look, let's not worry about the world, and there's no dynamic out there, we'll just, we'll just run with what we've got. But there really was a global appetite out there, and we had to be competitive in that world. And I think that's been given a recognition again with the new government, saying that we want to catch up with the rest of the world. We don't want to be sort of living in our own little bubble. So I think that purpose sustained us of wanting to be competitive rather than getting caught in the climate wars of whether, are you a believer or not a believer. But you want to be competitive in the dynamics that are obviously out there.
Yeah, very much so. And even, COP26 last year in Glasgow, the Morrison government had, for the first time, had a pavilion at the, at COP, and had made the undertaking net zero by 2050. And the CEFC had a chance to be, and ARENA were out there. I think the government were very pleased to be able to tell those stories out there because they, they're, as you say, it's a global kind of issue that's being addressed, and there will be another COP, of course, in Egypt a bit later in the year. But looking at some of the other things, I mean, Greg, do you feel from where you sit and you see the CEFC today, it's kind of lived up to expectations? You sort of surprised at its success, or are things that you thought it might otherwise have been?
No, I was always confident that it would be successful, Anne, but of course that's down to the professionalism and capability of people like yourself and Jillian and others who've been on the board and who have worked in the organisation. So I'm really pleased for it. But 10 years on, you can also look to the future, and with the commitment to net zero and an interim target at 2030 that's in the Senate today, a 43% reduction, there's a huge transformation task ahead of our country. It's still a very emissions-intensive economy. We've wasted a lot of time with the climate wars in recent years. It's been a pity. We've abandoned as a country, an economy-wide carbon pricing mechanism that I still believe is the most economically efficient way of allowing investors to make decisions and business owners to make decisions to reduce emissions. And so we're going about it in a more targeted way, and we've got the safeguards mechanisms in place. 215 facilities are covered by the safeguards mechanism, and they're going to bear a fairly large part of the burden, of reducing emissions to 2030 in particular. And the energy sector's still got massive transformation to go. So there's a lot of work to be done, and what all that means to me is that the CEFC has a really important role to play. And if I think about what it means practically, and I think about a region, for example, like Gladstone, where we've got an aluminium smelter, a coal export terminal, an LNG export facility, and lots of local industry that's fairly energy intensive, the transformation is so important, and it will require the mobilisation of very large volumes of capital. And in that context, many players from government and the private sector are going to need to be brought to bear to make those investments. And I think the CEFC will have an important role in helping catalyse that. And, so you think of the renewable generation, the transmission capability, the storage capability, the investment in technologies that's going to be needed to bring all that about just in a region like Gladstone. And then you can think about the Latrobe Valley, you can think about Portland and southwest Western Australia and steel making facilities and a whole host of others. I think we're only just starting to face into the scale of the challenge that we've got to bring about an economic and energy sector transformation quite rapidly in Australia. So I think sky's the limit for the CEFC.
Yeah, and look, you're very pleased that you see it that way, because, we do as well. As you say, the government has, in the process of passing its bill in the Senate, being debated. I see David Pocock's added a few amendments, but otherwise it looks like that may, could well happen in short order. And part of that is the CEFC's Act will be changed for the first time in its 10-year history, where the object of the Act, which was initially facilitating the flows of funds into the clean energy sector, a fairly unremarkable sounding kind of object, is now going, well, on top of that, will have help deliver on the government's climate objectives and policies, which of course will be the 43, particularly in the 43% reduction. And the other big cornerstone policy initiatives of Chris Bowen as the new minister is the $20 billion Rewiring the Nation Fund, which is $20 billion to be invested in particularly transmission across the country, with prioritising AEMO, grid operators, their kind of leading projects, which include things like VNI West, Hume Link, Marinus Link, which is linking Tassie to Victoria, and it's on the record that the CEFC will be, part and parcel of, or probably, the key kind of certainly financial player in helping the government implement rewiring the nation. So we're very pleased to be working with the government and the department on how that may be implemented over the coming months. They're very keen to get the show on the road. The other thing, of course, is the National Reconstruction Fund, which is $15 billion to invest in the Australian economy, and three of that 15 is dedicated to various clean energy related investments, be it manufacturing of things like solar PV or wind turbines, investment in green steel, green aluminium, so on. So again, we hope we'll be working closely with the government on implementing that policy. As you say, safeguard mechanism is going to put Australian industry under under pressure to abate carbon, which will lead to large investment opportunities. So I think you're right. We sort of see the opportunities for the next 10 years almost as big, if not greater, than ones we've seen in the past.
Yes, and I think certainly with a few tailwinds behind the CEFC's activities rather than sort of facing headwinds. But I think if I think back to the foundations of putting in place sound practices and disciplines and the identification of what the subsidy is worth and what the public policy outcome is, all of that will really be very helpful in dealing with some of the ambitions the government might have that require more of a subsidy than we had available, because the financial discipline is all about doing the analysis. And I was very proud that the CEFC was able to attract talent into the CEFC and garner respect from the industry and other financial players, to the point where when the CEFC had done our homework about, well, we think this is going to work and it's on this basis, it requires that equity, it can only be going for this period, 5 years or 7 years, we'll go out to another 2 years if you go into 5 years. It was all of the trade-offs of working with the sector, and as Greg said, acting as a catalyst to bring the money into around the pot. All of that is to have the talent and the respect in the industry and know the sector very deeply really helps the government in fulfilling their ambitions, as well as bringing the private money behind it. So I think it's a great opportunity for the CEFC to expand further.
Look, it is. We've got a terrific platform. We have about 130 people today, soon to increase with these policies substantially, with offices all, pretty much all around the country. And we have just such deep expertise in some of these areas. We've got a kind of dedicated team around the grid, which, I don't think any of the investment banks or banks would have, people with that expertise. Battery storage, of course, wind, solar, but also in transport, agriculture, natural capital. And so it is a tremendous platform of talent and expertise that we can build on to help deliver on the rest of the decarbonisation challenge that we have ahead of us. Maybe one last question before we go to some of the questions from our listeners, of which there are many I see in the inbox. Maybe, Jillian, one for you. What do you see as the big challenge in terms of trying to get to these targets, these emissions targets or renewables targets? I mean, the other one is the 82% renewables by 2030. Today we're in the high 20s, but what do you see as
I think one of the challenges has been eliminated, and that's sort of hopefully the end of the climate wars. I mean, it's so much easier to mobilise energy and focus and capital when you all believe in the common goal. It's when you are going along saying, oh, do I have to really do this, or maybe not, maybe yes. And the companies I've been involved with who, once they've taken on to do it, they're extraordinarily effective in getting momentum, not only mobilising the staff on board with enthusiasm, but identifying all sorts of opportunities, which are sometimes pretty low-hanging fruit. I think I was telling you, Ian, about Woolworths in refrigeration. I mean, the payback period was about 3.5 years. I mean, it was once you started looking at these fairly what might have been marginal investments. When you looked at them, you could make them very positive investments, and the capital was available. So it's getting the foundations of policy right and a common goal identified that I think we as a country will rally to the cause. You've got a different head of the BCA, so therefore a different attitude there, and that's bringing out this interest in wanting to be proud of what you're doing in terms of the global environment and positioning your company with your consumers and with your employees and with the world, so you can hold your head up high. I mean, I think it's exciting and we'll get there rather than. But I'm a bit of a glass half full person, so I think you kind of once you know where you're going and you know everyone's supportive, then you will mobilise all sorts of inventions and improvements to achieve that end. No,
most certainly, and technology, of course, has been a big part of it all, and Australia has. And we being a leader in many respects, particularly around things like rooftop solar technologies, in soil carbon development, Sparagopsis, which is used to reduce methane emissions in livestock. And we see at CEFC, because we have a kind of a clean tech fund, what we call the Innovation Fund, that's been making investments over the last 5 years in small, startup style companies, venture capital, if you like. And I'm always inspired by the people that come forward with these things, be they new generation lightweight solar panels, emulating shark skin to reduce friction on planes, to use fuel. Anyway, it's incredible what's happening out there. I'm going to pick up some of the questions from our audience, because there's some interesting ones there, and maybe one for you, Greg, that's come through here. Someone has asked, in talking with your families and networks, how much are they truly worried about emissions? Has the fear of climate change now been overtaken by energy prices, the war in the Ukraine, and all the other tough stuff happening in the world?
Not an easy question to answer. I think if you want to try and look at some evidence to answer that question, you look at the last federal election in May, and there was a pretty widely expressed concern about climate that contributed to the election result. I think that's undeniable. I've been doing some work to understand some of the election results, but the election of the teal independents, if you like, I think is very clear evidence of that. The Greens won several seats in Brisbane, which I think many people considered a pretty extraordinary outcome, and basically won votes from the Liberal Party to win those seats. About 10% of Liberal voters switched their vote straight over to the Greens in seats like Brisbane and Ryan and Griffith. So I think it's a very widespread concern. It differs a bit, of course, from region to region and city to city, but I think it's now really evident. You've only got to listen to at the moment to the news about the floods in Pakistan, heat waves that have been going through Europe, the fires that have been occurring. They're quite extraordinary events. And the things that climate scientists have been telling us for a long time are in evidence now. So I think that's a very deep-seated concern. Naturally, everyone's worried too about the war in Ukraine and the actions of Russia in instituting that conflict and the impact that it's having on energy prices globally as well. It's a very complex environment that we're working in. But I also think that as these pressures mount around climate, you would expect, and I think it will eventuate, that there'll be a greater consensus and more concerted international effort to address emissions. And so that in Australia, I think the important thing to understand, it's not an easy transition for our country to make because of the energy and emissions intensity of our economy, but nonetheless it is a transformation we should view with a positive state of mind and realise the economic potential that it's presenting to us. So I'd like to think that we start to take it in a much more positive way and see it as an important opportunity for our country. And I also sense that that's starting to emerge.
Yes, it's interesting, the Russian, the conflict and the gas crisis. It's actually, ironically, particularly, in Europe, which is closer, of course, to the conflict, has heightened countries, including Australia's sense of energy security and independence. So, there's even, I think, a stronger push, certainly globally, on countries having their own independence, which will, of course, lead to even more, renewables and or certainly, dealing with friendly parties. And the other thing that we talk a lot about, looking out to the future of the CEFC, is tapping in to well, not so much as part of the security point, but where Asian countries like Singapore, Japan, and Korea that are really short energy, looking to Australia potentially to export things like green hydrogen, and there's that very ambitious Sun Cable project that's looking to export electrons to Singapore. So in some ways, the conflict has, the Russian conflict has created even more momentum around some of those things, which may, in fact, in the longer term, be good for Australia. One area that we, I see it in a couple of the questions here that are directed your way, Greg, is the $3 trillion or so of super funds here in Australia. We're obviously the beneficiaries of some very, the policy that was implemented all those years ago. We have an enormous amount of capital to be invested. Many of those industry funds, I hear it all the time, have members that want that capital to be invested into things with a positive environmental or a social outcome. Do you have thoughts on how do we marshal that capital into the clean energy transition? Are you optimistic about that?
Well, there's certainly many investment opportunities that one would anticipate, but I've noticed this debate, of course, in the last couple of weeks. The important thing for everyone to understand is that a superannuation trustee has one duty and one duty only, and that is the best financial interest of their members. It's called the sole purpose test. So all the thinking about investment strategy, asset allocation, portfolio diversification, risk management, where investment decisions are going to be made is only able to be seen through that lens. So it's not a case of government or society saying, oh, gee, it'd be great to mobilise our super savings into housing or into manufacturing or into clean energy. It's a matter, if we have these objectives as a society, of government really catalysing that conversation and talking to the superannuation sector and saying, well, okay, well, talk to us about your investment strategies, your sort of risk return that you work to, what's your portfolio look like, and how might we be able to work with you to make allow you to make sensible investment decisions to invest in electricity transmission and distribution, for example, to hook up large-scale renewable generation to the existing grid. It's a collaborative effort, if you like, that ensures that public policy and societal imperatives can be met, but most importantly, from a superannuation trustee's point of view, that it fits within and satisfies their duties as trustees to the members of the fund to invest people's money wisely.
Yeah,
and there'll be a great opportunity to do that, I think.
Yeah, look, I'm sure that's the case. You've just got to kind of get their particular requirements and kind of provide the investment opportunities and get the two to match up. And that's, and we've got, of course, doing a lot of work in that space. In fact, only last week had a group of super funds around a table in Melbourne talking about that very issue. There's one here, Jillian, for you, that asked that CEFC's done a lot of interesting and exotic transactions over the years. Are there any favourites that come to mind in your time?
It's like a parent, you can't have any favourites.
Sun-dropped tomatoes, maybe.
I was talking to Ian about sun-dropped tomatoes, which were he was telling me came to not such a happy end. But
it's been reprised. It's back again under new ownership.
Some of the lenders lost their money.
Yes, along the way. Yes.
I don't know whether it was a favourite child, but it was certainly my initial reaction was, we're not doing tomatoes as our first transaction. And Oliver Yates was very keen on this tomatoes and wanted us to extend a letter which basically said, if you get this amount of equity and you get a pilot scheme and you get an off-take agreement from one of the major supermarkets and we will lend you some money. And I said, that's 101 of finance. We don't have to write that, because I was very concerned we didn't give some promise to somebody who'd hardly got their idea going. So anyway, 18 months later, they came back with the equity and the pilot and the contract with Coles. And so we said, yes, we can lend you the money. And then about 6 months later, they came back and said, no, we've found cheaper money from someone else, the CBA or something. And I was delighted. Oliver was a bit disappointed because he was a bit like he couldn't get his commercial banking out of his system to say, but we did all the hard work. And I said, but we did all the hard work and we catalysed the transaction and we didn't have to put any money into it. So I liked that story, especially to be able to convey it to Joe Hockey, who was, waiting to see if we tripped ourselves up. And I said, this is the sort of thing we're doing. We haven't risked any money at all. And that catalysing was exactly the sort of thing I was hoping we could do more of.
Yes.
But there were so many transactions that we got over the line and we leveraged the banks to lend a bit more cheaply. It's amazing how when you get a whole lot of bankers around the table, all they're trying to do is maximise their margin. And when you get one in there who says, we could do this a bit more cheaply, really, because, it's not so risky doing this and doing that, and they're looking like, well, it was amazing how I said, this is a really good transaction to get over the line. And if we do this, we'll be able to do that. And they said, okay, those bringing out the best in people around a table to help the project was quite good when you're dealing with commercial bankers. So they were quite satisfying.
No, well, I think that's one of the, the great things about it is, as you say, we have to play this sort of catalytic role. We have to look out for market failures, and we're constantly alongside the private sector banks. Often, we're doing it a little differently. Our terms might be longer, or we might take some risks. And one of my favourite transactions is the in a Project Energy Connect deal with Transgrid that was a big bit of infrastructure, our first really large-scale grid deal where, it was a multi-billion-dollar transaction and there were senior banks at the top because it was a regulated asset, but we provided a slice of sort of subordinated debt that was long-dated and had particular characteristics that allowed it to work for the banks and the kind of the Transgrid shareholders, which are kind of pension funds largely. It allowed their return to be met within the constraints of the cash flows that came from the regulated assets. There's a sort of regulated test that only allows a certain cash flow as a proportion of the capital. Anyway, it kind of felt like it really unlocked some very significant expenditure and therefore a couple of gigawatts of renewables hopefully down the track. And
I think those are the sort of transactions that Greg's talking about, where you identify where if you give a little bit of protection, then the other money can flow in behind it. Because I do remember when the CEFC would say, all right, we'll just be repaid 2 years after you. I mean, in any crisis, you'd all rank equally, but it did give a timeline where the banks could handle something out to 5 years, but they wouldn't handle something out to 7 years. So it wasn't quite quasi-equity, but it was at least in their thinking they could mobilise the funds to.
That's true. There's less refinancing risk, and we still see those sorts of deals, regularly, where we'll be a little, longer duration than the rest of the.
I think another fond memory that comes back is the sense of cooperation in globally with. I think Josh Frydenberg described CEFC as the most, whether it was the biggest or the most successful green investment bank in the world. Well, there weren't that many green investment banks in the world, but whoever there were there, they were cooperating with each other. So when we had a proposal for a waste-to-energy project, and we always asked, what was your experience with the commercial banks? Because we wanted to be able to say, well, you can't just come to us as your first stop. You have to go and look somewhere else just to make sure where there is some kind of market failure, although we can work with other banks. We want to know that you're not just leaning on us as the first stop. And they said, well, they'd been to one of the major banks who said, well, we want 70,000 to do an analysis on understanding waste to energy. And I said, well, we don't need 70,000 to understand waste to energy. We do understand waste to energy, and we also had a blueprint from the Green Investment Bank in the UK, where waste to energy was one of their main streams of investment that they were formed to invest in. So we took their blueprint and then filled it all in, and it was that building up the expertise, being able to give a good hearing to the project. And sometimes these projects we didn't end up financing, but they went off with a better equipped format for how they were going to seek funds from somebody else, because they could say this is the calorific value of the waste, this is the conformity of the waste, this is the term of the waste contract, all of these little boxes that we gave them, this is what you need to think about, they were able to do. And I think that was very satisfying to play a role in an industry that was developing by helping them understand how to make the project familiar to everyone, where you don't have to pay for somebody else to just understand what you're talking about.
No, exactly. Look, maybe one other one for maybe for you, Greg. There's an audience member has asked, the UK set up the Green Investment Bank with a view to it being sold, and of course was sold to Macquarie, I think in 2017. Do you ever see the CEFC being sold? Would the government have any intentions to do something like that?
Well, I'd certainly rather not see that happen, because I think the purpose of it could then be lost. A commercial owner of the CEFC would be looking to maximise returns on their investment in purchasing it, which in turn can compromise the purpose. And I think Jillian's and yourself have really outlined how it has gone about addressing market failures, taking a little bit of risk, entering into longer tenors in debt arrangements, all of which for the purpose catalysing investment in clean energy and clean technologies. And I think it's got a tremendously important role to play in the years ahead, and I don't see any rationale for selling the CEFC, and I certainly would not want to see its purpose compromised in any way.
No, agree with that.
It's interesting because when the Green Investment Bank was first formed and it had bipartisan support, I used to say, well, you've got bipartisan support, so that's very nice to have. And then a year later, the same director came out and said, I can't believe you've made so much progress. And I said, well, we don't have bipartisan support. We've got to run like mad to prove this model. So we really did work very hard to try and define what we were doing, whereas they had two things. One, very clear categories of work, down to the point where, we're doing waste to energy, offshore wind.
That's
Unlike
right.
us, we were doing renewable energy as a category. And it was up to us to define it to get the diversity of risk across the projects. But they had the bipartisan support because of those three areas that they'd identified, and also the fact that it was going to be sold. So they said, well, our purpose is to build up something that can be sold. And I said, oh, well, no, we didn't have that as our purpose. I suppose we were sort of busy getting going to prove what it could do, always with the idea that it would morph as you moved into areas where you were a bit more in need of But I was looking at a background where we didn't have bipartisan support, and that meant you had to be a little bit more flexible as to what the government of the day chose to make of the organisation. They did always have an intention.
They did, that's right. It was conceived with a view to ultimately sell it. And look, I think they still hold some kind of golden share or something, the UK government, in the GIG, as it's now known, down at Macquarie, and I think to keep the sort of reporting particularly.
I think that's right in terms of the obligation of sticking to those areas of investment, but in selecting offshore wind, waste to energy and energy efficiency, they did really progress offshore wind to become commercial in its own right, and waste to energy they did develop. And those, so identifying those particular industries that they wanted to build up, I think they achieved their purpose on that.
No, that's right. Well, it's interesting you mentioned offshore wind because, one of the technologies it used to be technologies of tomorrow here in Australia, but fast becoming of today, will be offshore wind. It's got a little bit to play out. The economics are challenging. There's a lot of transmission to be built, but there's a lot of certainly state, with the Victorian state government hugely behind an initiative. And if we're thinking about the CEFC's plans for tomorrow, there's a raft of them, of course, but one of them will certainly include offshore wind. We're getting very close to time, so maybe I'll just give you both a chance for any parting kind of comments, things you might see happening in the future, or anything you'd like to say before we wrap up. Greg, if you want to go first.
Well, I think firstly, just to round out the answer to that last question too, Ian, I mean, if you think about it, and if the return, effectively the portfolio-wide return on all of the CEFC investments is 4 or 5% or something of that nature,
Right.
then and it's privatised, or the shares are sold by government, would an investor be satisfied with a portfolio of the assets of that quality for that type of return? And it's pretty unlikely. Even if a government continued to hold a golden share or something, ultimately the purpose of the institution would focus more importantly on a shareholder return. And that's just, I wouldn't want to see that compromised. I think the CEFC's got a really important role to play, which brings me to my concluding comments, and that is to just say thank you and congratulations to Jillian, firstly, for taking it on. It was a pretty hard ask. She's given a bit of a pointer to that. When government changed in 2013 in particular, there's no doubt the government wanted to abolish it. I remember in particular one parliamentary committee hearing that Jillian spoke at, and she gave a very feisty defence and explanation of how the CEFC was operating and the benefit that it represented financially to taxpayers as well as from a public policy point of view, and that spirited defence, I think, was very important. So I'd like to acknowledge that, and of course there are other directors on the board at first and subsequently, and to thank all of them and thank everyone who's worked at the CEFC, because it's been a real success story. It's quite unique, and I do believe, honestly, it's got a great role to play in the challenge that we've got ahead of us in bringing emissions down and transforming the economy. So I wish everyone all of the best from here, and thank you for having me.
Absolute pleasure, and thank you for those very kind words. You know, it's an absolute privilege to be the CEO of an organisation of calibre and importance of the CEFC. But so thank you. That's very, very, very pleasing to hear. Gillian, would you like?
Only to add my thanks to everyone who played a role in the survival and the thriving of the CEFC, and it certainly was a team effort. And one of the really good things about requiring a board that had a knowledge of energy and the finance sector was that they were all very committed to the purpose. And when we were under fire, you really felt they were fully behind you. Everyone in the CEFC, I probably did give a feisty defence of what I was doing, but I never felt alone in terms of the team that was both here in the executive and there on the board and the CEO. We were all in there together, and I felt a very strong need to support them as much as just defend something I'd had something to do with setting up, and the responsibility that Greg gave me in the very beginning of this has a purpose and you've got to believe it and then you've got to fight for it, and then he leads me to it. Well, that was all right. I understood the message, and I think, it's like anything when you really believe in a purpose of something and you've got others around you who do so, it's a wonderful spirit to inspire your day and give you a purpose. So,
no, absolutely, and well, thank you for that. And look, I should also mention and thank the current board. You know, Stephen Scull has been the chair for 5 years, and tremendous board. A couple of new additions more recently, but have carried on in that spirit. Hugely supportive, and hopefully we'll see both of you and our current board and members of the old board at some of the 10-year celebrations that we've got planned in November. So look, thank you both again very much for being part of the CEFC's Green Room. It's been an absolute pleasure to spend an hour chatting about the past and the future of the CEFC and Australia and its aspirations and the challenge to get to net zero as quickly as possible. Thank you, audience, for dialing in. I hope you found it interesting and entertaining. There will be a recording made available after the webinar, so we'll ping that around. And if you've got someone who you think might be interested and wasn't able to make it, feel free to share it with them. There'll be a survey also that'll appear at the end of the screen. I'd like to thank all my CEFC colleagues who've kind of been part of the last 10 years, erstwhile and present, and thank you also for the team who helped produce the Green Room today. So on that, I'll say farewell. Thank you very much.
Thank you.